All right, good afternoon. Welcome back here to Trader Money. Great to have you aboard. I hope you're having a fantastic day. Let's get down to it. Let's go take a look at the challenge here. We have Microsoft, whose option right now is trading at 284, so 2 cents down from where it was this morning. We have Micron, whose option is trading at 225, and we'll talk more about that one. And then we have 465 on Visa. Micron, Microsoft, there's no gain loss here in the options as they sit here on the spreadsheet with the updated prices. Now, if we look, the stock price, right, the stock entry price for both of these, right here, 43.63 and 137.99. You look at the current price, and I know it's a few pennies here or there, but 44.13. Right? I mean, we have a stock that's up 50 cents on us, and up 1%, and we have zero gain on the option. And here we have a stock that is up about 60 cents, 55 cents, and zero gain on the option. And, this is not something incredibly unusual. It's something we've talked about now since we entered Visa. We saw this happen in Visa the other day, but have had a few questions, revolving around this. But this is not something that is highly avoidable. It is not something that is unusual in any way, shape, or form. It is something that is highly normal, that happens, all the time out there. We saw it go in our favor on the last Microsoft trade, where we probably should have been down about 1,500, but the implied volatility kicked up and made it so we're only down 900. So, it is one where because of the way the market has gone, because of the time period, because of the way the volatility index has gone, we do see a little bit more pronounced here with the implied volatility drop. And, it goes back to what I've said before. Does it mean you have to change your trading? No. All right. Can you get deeper in the money? Can you get, a spread to offset some of it? Sure, you can. But you alter your trade a lot with that. But bottom line is, to enter a trade in this type of environment, you need to have an expectation that that thing's going to move and that it's going to move significantly. Right? When we built the challenge algorithm, the premise of the triggers and all of that, it's built for trend. And so I will go and make these trades on the signals each and every time, knowing the odds are with me that, hey, this thing's going to trend. But when it doesn't, I know that that risk factor is there. So it's just one of those things where right now it feels a little more pronounced, but it really isn't all that dramatic. We've seen it happen in many of our other trades here so far this challenge. And it's just a reality of the game, right? You have the implied volatility element and you have the time cost element, and neither of those are in the way the challenge is structured and the way we do the challenge and operate the challenge. Neither of those are avoidable. Now it brings Micron to the time stop, right? And Micron is this afternoon is the red time stop. And we're in kind of one of those positions we've been in with other trades where, yeah, the price of the stock is higher, right? The price of the stock has gone up, but the option value hasn't. And so do we exit or not? And this isn't an unusual circumstance or anything like that. This is just one where I get a choice. And my choice here is I'm going to hold it. Right? I'm going to hold it and run with it here. It's one where, we've seen the majority of the implied volatility drop already come in on it. It has about a $750 delta. So there is some risk involved with it, but also some nice reward associated here with it. You can kind of see what it's done since we entered. We entered right back here in the middle of August. Well, Friday last week. We got the gap up Monday, and we've just kind of had just kind of two stale days here for it, both on pretty low volume, and both just kind of not all that significant from a technical standpoint. I'd love to see a gap up and go, break 45 tomorrow, gap up, bust that 45 level, and be on its way. But we'll see kind of how things play out here tomorrow. If you look at Intel, we're not seeing a breakdown when it comes to Intel. We're not seeing a breakdown, when it comes to an AMD here. So, as we look at other, semiconductor stocks, we're not seeing any real breakdown. Micron is lagging here a little bit today. Some of that is due to some of the supplier news that was out there, but I don't think a lot of it has, I don't think it has a lot to do with it here. Micron does have a tendency to beat to its own drum just slightly from day to day. But anyway, that's the volatility squeeze. I'm not going to talk too much more about it. I'll refer to some of the videos that we've done already, here going forward. But, it just simply is not an unusual thing. It's not a dramatic thing. It's not something that, you go and you say, well, how can we correct for this and how can we fix this and not deal with that? No, it's a reality of the situation, right? And, could we completely mitigate it? We sure could. And then we lose the essence of the challenge, right? And so, when it comes down to it, we'll continue to have implied volatility risk on all options, and we'll look for, the signals to lead to, trends and moves that are strong enough to offset that. We've had some pretty strong gainers like a Bank of America this challenge where, we made some pretty good money on it, but the implied volatility dropped and we could have made an extra $200 to $400 on it had the implied volatility gone our way, but it didn't. So, we have had it, throughout the challenge. It's just very visible right here and right now. Okay. All right. So holding the three positions, there are no new signals on the board. We do have a couple crossovers. Same stuff as this morning. Alcoa. We have Twilio with a 3-7 crossover. So just nothing too significant there in terms of new entries. Nike, I thought this one had a shot at giving us a trigger here today, but didn't. And then, we have Target on the watch list. Been asked about this one today. This is earnings, and the earnings absolutely crushed it. The earnings just... I don't know that you can find a hole in the earnings. And, when it comes to both Walmart and Target, they have both proven something. They have both proven that they can gain the online presence, still keep the brick and mortar stores intact, and still stay viable in a world where it's all about Amazon. So a very solid report on Target. I would not be surprised to see Target trade up into the 120, 140, 150 area in the months to come. I'm not chasing it on this move, but I do think pullbacks on Target will be very, very buyable as we go forward here. Okay, market metrics here today. Slight improvement in them. Nothing too dramatic, but you can see this is the biggest update for the bullish percent index that we've seen, right? And we saw yesterday market went down. Bullish percent index did not go down with the market yesterday. It was the first time we've seen that since the correction began, and that is a positive sign for the bulls. So, we don't have a full-on bull signal out of the bullish percent index yet. I think we'd need another 2% rise, but we are definitely seeing a just a little bit of a change in the way that it has moved here. If we look at some things like a number of stocks trading above 7 and 20-day moving averages, which here we'll start with the 7. We saw this number dip a little yesterday, but popping right back up today in a very bullish area. If we go to the 20-day moving averages, this is one that has been lagging, and it normally does. But when the market's ready to just really go, we tend to see it start to play catch-up. It's played a little bit of catch-up. It's gone into a neutral territory, but it's still not in a full-on bullish territory, that we tend to see. And the pace of movement has been pretty just consistent. It hasn't been anything, too dramatic there. If we look at performances between, various sectors and various market caps here, let me pull it up. But we'll start with the small caps, and if we look at the small caps relative to the large caps, you can see they're both performing about the same. Large caps are down 1.7%, small caps down 2.4% in the last 30 days. That's not a significant differential. It's not overly bullish. It's not overly bearish. It's a very neutral type differential. When we see small caps outperform by more than 2% over a 30-day period, that tends to be a very bullish differential. When they lag by 2%, that tends to be a very bearish differential. So how it sits, there's nothing too special about it. If we go and we kind of compare the emerging markets, we still see emerging markets lagging the S&P in a huge way. This is a very bearish differential. It has gone from overly bearish, which is more than 5%. And a lot of times when you start to see a 5% differential in these, you'll see it start to come back to where the EEM will outperform the SPY. And we've seen it start to come back a little bit here. Yesterday went a big way to doing that. I would not be surprised to see that continue here in the short run. But, as it sits, it's still a bearish metric. But, we do see it coming out of that overly bearish state or situation there. If we look at transports relative to the S&P, right, we can see transports are still lagging by about 3%. That's a bearish differential there with it. If we look at things like financials and how they're performing relative to the S&P, they're still down more than 3%, lagging. So we don't have, the transports, the financials, these groups really starting to take control, really starting to assert themselves and come into the market, which is one of the reasons why we still see the market vibe sitting at 0. Yes, it's a bullish reading, but we do not see the bulls with an incredible control of the metrics here. It's one of those readings where it's a bullish reading because we went basically from -7 to 0 in 2 days. And then when we see that, that typically leads to more of a bullish run afterwards. So, that's kind of where the metrics sit. The volume flows are pretty neutral here. We don't see a big, we don't see a big differential between bullish and bearish volumes out there in the market right now. I don't think it's one where we can say, hey, big money and fund managers, they're stepping in and saying all aboard, let's go, or anything of that nature just yet. But, we've also seen the selling, really kind of taper off, that kind of big, brutal type of sell action where, there's just this flushing. We saw a little bit into the close yesterday, but it was still relatively light compared to what we have seen several times here this month. So, metrics are, market vibe still at 0. There's a balance between the bullish and bearish metrics. The reading is still bullish there on them. We still have, a little bit of resistance to clear here with the market, for the bulls to, take this higher and really wrestle it away from the bears. And it's a market where, are we still going to see a little bit of chop? I suspect so. But you'll notice the chop in the last 3 days has been much lower in terms of magnitude, in terms of intensity. It has been much more subdued than what we have seen the rest of this month. So we are seeing a little bit of change in those elements here. Okay. Last thing before I jump off, I was asked about Valero here today. Valero had an upside 3-7 crossover on it on Monday. And I'm bullish on Valero. I think this is a $110 stock, masquerading sub 80 right now. And, a lot of that because of its sector, because of its group, and energy right now is not very investable. But we've seen a shift in volume flows when it comes to, Valero here. Not a big enough shift to make me uber bullish that, hey, you know what, you buy it now or you're missing out type of thing. But we've seen a little bit of a shift here, with it. If you come into something like the Chaikin oscillator, it has spent most of the time above zero. Let me get the Chaikin money flow in here. Instead. But if you look at the Chaikin money flow, it has had its biggest, kind of upside money flows come into it that it's had in a while. We saw a big push right here in February and March, January and February. And then this has been the biggest push. And so while the market hasn't set a new high on Valero here during this time, we have seen more of a money flow come into it. But to me, it's still one where, can you play it? Can you play it right here? Can you use something like a 77 stop? Yeah, and it sets up pretty decent risk reward, if you want to play it higher. But is it something where I say, hey, the probabilities are on your side? I think they're about as good as the market. Meaning, market goes up, Valero will go up, and vice versa. If you're looking at this week and into next week there, but yes, it is something I'm very bullish on longer term. But I don't think you can rule out 74, 70, even 68 coming into play. You can't rule it out technically, you can't rule it out fundamentally, and you definitely can't rule it out market-wise. So, there is that risk factor associated with it. So I would not be overly aggressive without a really, solid understanding of where you want your stop or your out to be should various things happen. I do agree that there is a ton of upside potential here in Valero. Okay. Alrighty. Well, thanks for hopping on. Have yourselves a great evening, and we'll talk to you tomorrow. Take care.